Hello, let's talk about the exploration of different types of investment vehicles, such as stocks, bonds, ETFs, exchange-traded funds, etc. Exploring different types of investment vehicles is essential for building a diversified investment portfolio that aligns with your financial goals, risk tolerance, and time horizon. Here's an overview of some common investment options. 1. Stocks. Stocks represent ownership in a company and offer investors the potential for capital appreciation and dividends. When you buy stock in a company, you become a shareholder and participate in its profits and losses. Stocks can be categorized into different types, including blue-chip stocks, large, well-established companies with a history of stable earnings and dividends. Growth stocks, companies with above-average growth potential but may not pay dividends. Value stocks, undervalued companies trading below their intrinsic value. Dividend stocks, companies that pay regular dividends to shareholders. 2. Bonds. Bonds are debt securities issued by governments, municipalities, or corporations to raise capital. When you buy a bond, you're essentially lending money to the issuer in exchange for regular interest payments, coupon, and the return of the principal at maturity. Bonds can be classified into various categories, including government bonds, issued by governments and considered the safest form of bonds. Corporate bonds, issued by corporations to raise capital for business operations. Municipal bonds, issued by state and local governments to fund public projects. High-yield bonds, junk bonds issued by companies with lower credit ratings, offering higher yields but also higher risk. 3. Exchange-traded funds, ETFs. ETFs are investment funds that trade on stock exchanges and hold a diversified portfolio of assets such as stocks, bonds, commodities, or real estate. ETFs offer investors the benefits of diversification, liquidity, and low-cost access to various asset classes. Some common types of ETFs include index ETFs. They track a specific stock market index, such as the S&P 500 or the Nasdaq 100. Sector ETFs. They focus on specific industry sectors, such as technology, healthcare, or energy. Bond ETFs. They invest in a diversified portfolio of bonds with varying maturities and credit qualities. Commodity ETFs. They track the prices of commodities like gold, silver, oil, or agricultural products. 4. Mutual funds. Mutual funds pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other securities. They're managed by professional portfolio managers who make investment decisions on behalf of investors. Mutual funds can be categorized into equity funds, invest primarily in stocks. Bond funds, invest primarily in bonds. Balanced funds, hold a mix of stocks and bonds to achieve a balance between growth and income. Index funds, passively managed funds that aim to replicate the performance of a specific market index. 5. Real estate investment trusts, REITs. REITs are companies that own, operate or finance income-generating real estate properties. They allow investors to invest in real estate without directly owning physical properties. REITs typically focus on specific types of real estate, such as residential, commercial, retail, or industrial properties, and offer dividends to shareholders derived from rental income or property sales. 6. Alternative investments. Alternative investments include assets other than stocks, bonds, and cash, such as private equity, investments in privately held companies or non-publicly traded assets. Hedge funds, investment funds that employ various strategies to generate returns for investors. Commodities, physical goods like gold, silver, oil, agricultural products, or other natural resources. Cryptocurrencies, digital or virtual currencies that use cryptography for security and operate independently of central banks. Diversifying your investment portfolio across different types of investment vehicles can help spread risk and enhance long-term returns. Consider consulting with a financial advisor to assess your investment objectives and determine the most suitable investment options for your portfolio.